This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, July 15th, 2015. Euro dollar. So not much going on with the euro, with the market still contracting in volatility and confined to a pretty tight range. At this point, we're going to need to see a break back above recent highs, which came in at 112.16, or below recent lows, which came in at 109.15 for clear directional insight. But ultimately, the medium downtrend remains intact, and a break below 108.19, which represents that low that we saw back on the 27th of May, will be required to open the door for a bearish continuation, exposing a retest of the March multi-year lows at 104.62 further down. At this point, really only a break back above 14.67, the high that we saw going back to the 15th of May, would force a shift in the structure. Sterling dollar. So cable has done a good job of recovering in recent trade, with setbacks stalling out around in the 153.30 area, well ahead of that 151.70 base that we saw back on the 1st of June. At this point, it looks like the market could be trying to carve out a higher low at the 53.30 low in favor of the next upside extension, which will be confirmed on a break back above the 2015 high that was set on the 18th of June at 159.30. At this point, only back below 153.30 would compromise the short-term bullish outlook. Dollar yen. So dollar yen has mounted an impressive recovery over the past several sessions since that dip that we saw below 122 all the way down to 120.40. But at this point, it's difficult to determine whether the market is in the process of a bullish continuation back towards 125.85 or is in the process of looking for a lower top and additional correction back down towards 120.40. Euro Swiss. So Euro Swiss continues to be very well supported on dips, and the market looks like it could be in the process of attempting a broader recovery. A break back above 105.75 will confirm and expose the February peak at 108.15 further up, while inability to do so, followed by a break below 102.35, will negate that recovery outlook. Aussie dollar. So Aussie has done a good job of recovering off recent multi-year lows in recent trade, and the market could be poised for a bit of a corrective upside over the coming sessions back into the 76-77 area. But ultimately, the downtrend remains firmly intact following the break of 75.33, that previous 2015 low several days back, and deeper setbacks are seen towards the 70 area over the coming weeks. Really, only a break back above 78.49, the high that we saw going back to the 18th of June, would compromise the bearish structure. Dollar CAD. So dollar CAD is stalled just shy of the 2015 peak at 128.35, but the market is expected to take out this level and trade higher for a fresh upside extension towards the 2009 peak at 130.65 further up. At this point, any setbacks in this market should be very well supported by previous resistance in the 25.63 area. Kiwi dollar. So Kiwi remains confined to a very well-defined bearish channel, with any rallies being well capped. At this point, look for any rallies up towards the 68 area to be well capped by channel resistance, while back below recent lows that we saw, the recent multi-year lows, which came in at 66.20, will open the door for the next downside extension towards channel support, which comes in by the psychological barriers at 65. SPX 500. So a very impressive recovery for the S&P 500 in recent sessions, with the market surging back above 2100. Still, the market is still looking like it wants to put in a longer term top after putting in a record high in May at 2137, and there is the possibility for a lower top now ahead of 2137 in favor of a resumption of declines back towards and eventually below critical support, which comes in the form of the March low at 2040. However, if we do see a break back above 2137, this will negate the toppish outlook and open the door for an acceleration of gains to fresh record highs. Gold. So gold setbacks continue to be intense, with the market now trading just over the 2015 low, which comes in at 1143, and the 2014 base just below there at 1131. At this point, the market will need to see a break back above recent highs at 1175 to take the immediate pressure off the downside, while a break above 1232 would be required to officially take the pressure off the downside and open the door for a potential recovery in this market. Until then, the pressure remains on the downside for a potential retest and break of that multi-year low from 2014 at 1131, which guards against psychological barriers at 1000.